All right. Good morning. Good morning. How you doing, Bruce? How you doing, John? It's great to see you guys. First thing in the morning. Let's jump in, right? Let's rock and roll. Let's jump right in. Market's already up strong today, and so that's nice to see. I think everybody's got a little enthusiasm for what's coming next week. So let's jump right in. Bitcoin up over $100,000 again. How many of you still holding on to your Bitcoin options that we all got into? I still got mine. We had a little dip there and they came back down, but they're leaps. We're just going to never sell them. We're going to hang on to them until the end of days, right? Next year, when they come due, we'll just roll them over. Or we can take our profits. If you want to take some money, if you need to go spend them, that's okay. Go buy something nice for yourself. That's all right. I'm saving up for my new Tesla Y series. I'm going to get me a new Tesla Y. You guys ever notice that Elon Musk, he names those things? Bruce says he's got his Tesla. You got your Tesla, Bruce? I know what you're talking about. You're talking about your options. You got your options. Are you going to buy a Tesla? Need to get you a Tesla. Everybody's getting Teslas. I wasn't going to buy a Tesla. I was like, I don't know if I want one of those things. But we got so many guys in our club here, saying, "Oh, I bought that Tesla, and man, why that thing can drive by itself like you wouldn't believe." I had one guy who was telling me, he's like, I've been a airline pilot for 35 years, and I know what an autopilot is. I use autopilot in my work every day. And boy, I'm telling you, that Elon Musk, he's made some kind of autopilot in that car. He says that thing is really neat. My wife's always yelling at me, stop looking out the window. Look at the road. Follow the road. Watch the road. You guys like that? Watch the road. I got bruises on my arm from all the squeezes. Maybe I better get me a Tesla and let it drive for us. Anyway, I guess Elon had a little bit of a bad day yesterday. I guess you guys all saw that his rocket ship exploded. Kind of a half bad day, I guess. His rocket ship exploded, which was the bad part, but then the detached part returned back and he caught it with those big arms again. My goodness sakes, that's amazing, right? So he says, well, at least it was entertaining. So they're live and learn. I was looking at the news this morning before we started class, and they were saying that Elon's business, his rocket business, SpaceX, is more valuable than Coca-Cola and more valuable than McDonald's. That guy is unbelievable. How many businesses does he have that he has turned into something that's more valuable than some of the biggest, longest, best companies that have ever existed in this country? And he's done it all within his own lifetime, all by himself. Well, not by himself. I mean, he had help. But, I mean, this guy starts these businesses. I think he's an alien. I think he's an alien. I think he's a hybrid. He's half human, half alien. That's what I think. I think Elon's an alien. All right, let's get back to business here. I also read an article about Apple that they're kind of struggling. I've been saying that for years, right? You guys know that I've had a hard time with Apple. They've been buying back their shares for years to try and prop up their stock. They're kind of become a one-trick pony, those guys. And they're so locked down with their technology, and they haven't done really anything with AI. I'm worried about Apple becoming one of the has-been companies. They're kind of locked into their iPhones. That's about the only thing that really makes them any money. And with AI and everything, everybody's saying that, iPhones are kind of going to be old technology here relatively soon. So Apple's not doing anything with AI. They tried, and they're like, oh, we tried. That's hard. So what did they do? They just integrated Chat GPT into their iPhones. So they don't really do, but you know what? That might be a good idea because, all these guys who are doing all of their AI stuff, I mean, they're spending billions and billions and billions of dollars to create these AI systems and these big data centers, and they got to have giant cooling systems with a massive amount of water coming through, and they've got to, and Elon just built his big data center, and it's like massive, billions of dollars. And now they don't have enough electricity for it. So now they're all running around like chickens with their heads cut off, trying to find nuclear power plants that they can turn back on or that they can build. For years and years and years, it was always these guys down in California and these tech companies. Oh, we can't have nuclear power. That's bad. That's bad. But now, they need power, and they're running around. I guess nuclear power is not so bad after all. They're all getting these nuclear power. How you doing, Kirk? Good morning. And so, I mean, what the heck? Who knows? Anyway, maybe it's a good idea for Apple not to get in and build those big power plants and those big systems and have to worry about that. They just outsource it. We'll just license yours. You go do all the hard work. We'll just license it and make all the money. Maybe that's what the deal is. I don't know. They say that with this stuff, we may not. I don't know. We love our iPhones so much. I don't know how we're going to ever get rid of them, right? I mean, whether it's an iPhone or a Google phone or whatever, and they say that those things are going to be replaced. And I'm like, okay, what you going to replace it with? Because it's going to have to be pretty fancy. Maybe a chip in your head. I don't know who might think of doing something stupid like that. Elon. I don't know, man. The crazy, crazy things that are happening in the world today. All right. So that's my little concern about Apple. They're kind of a one-trick pony, and they're kind of stuck on that iPhone that's going to be replaced by a chip in your head. And they're not doing anything to innovate anything new. They tried to do electric cars. They dumped that. Tried to do AI. They dumped that. They just outsourced everything. The only thing they got is that one-trick pony. They got that little iPhone, and that's really the only thing. They got their computers, but those are small potatoes compared to what the PCs and all that stuff's doing. And those are all, they're little iPads and stuff. People like their iPads, I guess. But that's kind of still along the same side as a phone. iPad is just the same thing as a big phone, right? You kind of wonder why you carry two. But anyway, that's my concern about Apple. It's always been my concern about Apple. The last couple of years, it's been my concern about Apple. If we go over and look, I'll show you something. Let's go since we're digging on Apple. Let's go look and pull up AAPL. I can show you something. Right down here. Look at this. This is shares outstanding. They keep buying their shares back. And if you have a copy of Pitt News Magazine, if you know Pitt News look at this. January 7th, they got downgraded. So neutral, sell. January 7th, they said sell. And right down here, clear back in October, downgrade, reiterate, downgrade. Nobody likes them. They're buying back their shares, which means the only reason they buy back the shares is to prop up their stock, because they don't want their stock to fall. If they didn't prop up their stock by buying them back, the stock would be flushed down way more than it is. Their sales are just stagnated. Look at this. For the last 3-4 years, they haven't done anything. No growth. They're just dead. And then earnings per share last 3 years been exactly the same, dead. And they won't even give a dividend. I mean, hardly. I think they're giving dividends now, but they're little teeny ones. I mean, look at the dividends on this thing, 25 cents on a $230. That's like, why bother? That's a why bother dividend. They won't even share their profits with you. They think they're a growth company, and they got no growth. I mean, they're buying back their shares to prop up their stocks. They got no added growth, and their earnings per share has been the same for the last 4 years. And they call themselves a growth company. Knock that shit off. You ain't a growth company anymore. Start giving dividends. That's what I have to say about the Apple. So I don't actually own any Apple, believe it or not. I don't own any Apple. Actually, I have some funds that have Apple in them. So I guess I do own Apple. But I don't own any individual Apple stock. I bought some, and I rode that trend up when we got that nice little buy signal. I was thinking we were going to have, maybe Apple's coming back for us. And they got that nice run right there, but then, of course, it died just like everything else. I don't know whether it's going to turn around and rally. I think it will. I mean, I think Apple's going to continue to, well, I don't know. You come down here and look. Maybe if they'll buy some more shares back, it'll drive them up again. Who knows? I'm just not real big on Apple anymore. I mean, I have their little iPhone. I don't have the Google phone. Let's go look at Google. Google. Boom, 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 boom. Look at this. So these guys didn't do the drop, right? I mean, they didn't do the drop like everybody else. Let's go down and see. Well, they've been buying their shares back too, but look at their sales. Oh, cow, look at those sales. Boom, 182, 259, 280, $307 billion. Now that's called growth. Why are they buying their shares back? Prop up their stock. They say that's to share their profits with the shareholders. It's really just to prop their stock up. But I guess you could say, I mean, you want to look at it optimistically. Okay, earnings per share. Look at this, 580. Google's doing good. They just got downgraded by JMP Securities. Market Perform. They don't like them very. They got upgraded October 31st by China Renaissance. And price target. They never gave us a price target. Downgraded. So anyway, Apple. I think Google's doing way better than Apple. Way better than Apple. All right. They're innovating. They're doing stuff. They're coming out with some great new tools and products and services. They're not very good at marketing. They kind of really suck at marketing. Have you ever been to their website? I mean, look at this. Google.com. Did you know they got like 400 products? They got like 400 products. How do you find them? Did you know that they have like all these really cool products, all this stuff you can do at Google? I don't know how to find it. They got all these really neat things. Come up here and you can find some of the stuff that they do. They got Gmail, they got news, they got chat, they got YouTube, they got Gemini, they got search, they got play, they got calendar, translate, Chrome. They got all kinds of stuff. And this is just the beginning. Look at the slides, books, bloggers, keep, save. This is where you have to find out. Did you know they had all that stuff? They got so much stuff, and this is just a touch. And this is just a scratch of the surface of the tools they've got. They've got Google Earth. They got so many tools, and you don't even know about most of them. You just kind of, how do you know to use them? I don't know. You kind of figure it out on your own. You see somebody else using one and like, I would like to use that. How did you find that? Oh, that's just a Google tool. But, that's just the nature of their beast. That's what they do. They like to keep it clean, and clean they do. So, but they're doing really well. So, we come over and we look at our Google stuff. Let's go look at our Google. Now we're down on Google because we thought we were going to get a little bit of a pullback, and we didn't. We just bought a little tiny shorty. We bought a little, today it expires. We bought a little 3-day just as a hedge against the fall off that little shelf. And I thought it might, kind of flush right there because everybody else flushed, but not Apple, not Google. And man, we took it in the shorts on that one. We sold I sold a put here and picked up an additional $365. It's only worth profit loss on 300 market value. That we sold that put, sell a put. They're going to give us that full thing. We'll get that $365 at the end of the day today. Why the heck it's showing that it's only worth $10? I don't know. Sold a put. We sold the put. It's worth $365 to us. We're going to get $365 out of it. But we lost on that little hedge we put on. We bought 4 of them because it wasn't very much money. We're like, well, let's do $1,000. We'll risk $1,000. And it came out and we're going to lose that full amount. Market value now is only $34. We got everything to win, nothing to lose. So we're going to lose that full, and we're going to lose $1,000 on that one. That's kind of a bite in the ass. Sorry about that one, guys. Amazon, we thought the same thing. We thought we might get a little drop on Amazon. Amazon's another great company. If we come in here and we look some of the fundamentals, let's go back over and look at, this is Amazon. Where, how do I get back over to where I was? No, that's the wrong one. Come on. What is wrong with this? Okay, Amazon. Let's go back over to Amazon. AMZN. AMZN. So, you know what? We thought we might get a little drop coming back down here we thought we got a little bit better drop on that, but no, it didn't want to either. But look at Amazon. Holy cow. You want to talk about a company you want to be involved with? Look at the sales on this thing, just rocketing from 219 to 20, 386 billion, 469 billion, 513 billion, 574 billion. And then their shares outstanding have not changed. They're not buying back their shares. They're not trying to prop up their stock. That's amazing. Fantastic. Earnings per share. I think that a reconciliation year last year on 2022. I'm not exactly sure why that did that, but look at this. It went 115, 209, 324, 290, back up from negative 27. I think that's just kind of a reconciliation in there. What about their downgrading, upgrading? Reiterated reiterated. We don't know what all that is. Reiterated 230 to 210. That's down 750 to 800. That's down 225, 245. That's up 215, 210, 250. So they're reiterating up. They're saying it's going up to 260, and it's currently at 224. So they got a reiteration. Amazon's going to 260, and it's currently at 223.96. And they give no dividends. But hey, they really are a growth company, right? You can't call yourself a growth company when you don't have growth in your sales. You need to be given dividends. That's not fair. Well, we just buy back our shares and make our stock go up that way. Well, I guess if you want to, fudge the system like Apple does. Apple's fudging the system. I don't know. I think Apple's going to get knocked off their little pedestal up there. Sales in billions on Amazon. Kicking ass. Excuse the language, but man, you know what? Appropriate language for appropriate companies. Let's go ahead and look at Microsoft MSFT. MSFT. Well, we just want to look at the fundamentals. They've been buying their shares back a little bit. Not too bad. I mean, 243. They didn't buy any back that time. 240. Nothing to really shout about. All right. Can't complain. But look at their sales. Microsoft. Can you believe that? You'd think those guys would be stagnant, right? I mean, how many more copies of Windows can they sell? 143, 168, 198, 211, 245. Man, they are kicking ass. Earnings per share. Look at this. 578, 805, 965, 965, 1180. Huh. What a company. Holy smokes. Do we like that? And they're even giving dividends. They suck, but they're not, not bad. I mean, $429. $429 a share. They give you 83 cents for every share you have. Not that great, but they're a growth company. They truly are a growth company. So the fact that they are giving a little dividend, you can't complain about that too much. I mean, it was kind of a why bother dividend, but nonetheless, they are really a sales growth company. So we're going to expect them. Let's come down here. These guys downgraded them. Oppenheimer on October downgraded them. Where are they saying now, though? Ian, reiterated, initiated today. Centered, Fitzgerald, overweighted. They say they're going to 509. Let's see what it's at now. 429, and they're expecting 509. That's new highs. Woo! That is some moving. That is a good company right there. If you want to buy a good company, boom, Microsoft is the one to do. Apple, not so much. All right, NVDA. Let's go look at NVDA. What do we got going on NVDA? NVDA. Now, we sold a put down here trying to get some shares, and the market's rallying. So we didn't get, we might just get I don't think we're going to get our shares, but at least we'll get our consolation prize at $345. It's up 101 right now. So how about that? Let's go look at it closer. NVIDIA. Let's go look at the fundamentals. First of all, NVIDIA, they're giving a dividend. I mean, look at that. It's a paltry little penny. One penny dividend on $136 share. So that's a why bother. If I ever saw one, that's like sending somebody a refund check for a penny. It's going to cost more money. It's going to cost more money to execute the trade than it is to the money that you make from it. So that's a true why bother. But look at these guys. Now, they bought some shares back. Now, why they did that, I have no idea. 24.66 went for 24.64. Nothing to really shout about. So not really too concerned about that. Not like Apple, like a big tank. But look at the sales. Oh my gosh, sales in billions. And guess who's buying all their stuff? Elon's standing in line, just like all the other guys out there with their tech companies and their big AI systems had with their hand out. Please give me more chips. Please give me more chips. So they've done really well in 2024. That was kind of their big boom. And then look at the earnings per share, 119. Unbelievable. Now, these guys reiterated, whatever that is. So we're going to go from 167, 169, 165. They're estimating 185. Let's go see where it is right now. It's at 136. So they're saying this market's going to 185. That's a good company. That is a good company. We like NVIDIA. We are big NVIDIA fans. All right. Look at that. Earnings per share 24. They really selling it. And all these guys have their hands out, just can't get enough of their chips. That's just amazing company. All right. We love NVIDIA. Let's go see what we got going on NVIDIA. NVIDIA. Okay, that's a good one. Okay, what's the next one we want to look at? Let's go look at Tesla. Oh, Tesla. We all love Tesla. We want to go get our everybody wants the new Model Y. That's what I want anyway. Have you seen the new Model Y? Pretty slick machine, I'd say. Look at this thing, Tesla. We're going into the third drive here. We're going to hit that blue light. And I tell you, markets have a tendency to hit that blue light. And notice that it's four bars. 1, 2, 3, 4. It's going to hit, and then it goes back up. I don't think it's going to come down and give us our shares. I don't think it's going to come down here. Might, but it's going into the third drive. And we got, so much optimism and positive stuff happening coming up in the next couple of weeks. So I just don't see the market flushing out. Not that it can't, certainly can. We got a bunch of options in here trying to buy some shares. And I let the market come to us. Remember, we talked about that. Let the market come to you before you put these options on, and then buy at the money at your location. So that's what we've done here. That's why these premiums are so big and fat. I mean, this is $2,490 that we're going to get out of Tesla. So you look at this one up here, this Google one where we lost $1,000, and you're like, oh, man, you suck. No, man, look at that Tesla one. It's going to give us $2,490. You think I'm worried about that little Google play up there? No, not at all. Okay, just on one Tesla, we're going to make that all back. And that's just all we did is sell one. We could have sold a couple, and we're going to make that. Don't worry about that little Google play. That was just a little short play we put on there just in case it flushed. That was just our hedge. It was just our hedge. Same with Amazon, same with Apple. We got a little bit of drawdown on a few of those, but we're not worried about them. We're not worried about them. All right. Tesla, great company. Of course, we don't know. Let's go look at the fundamentals. Okay, what do they look like? Tesla, stock, buying it back? Not really. Tiny, a little bit. Sell. Oh, this is not Tesla. This is NVIDIA. Let's go look at TSLA. All right, here we go. Rock and roll Tesla. This thing's going to the moon. Okay, look at this. Shares outstanding. Is he buying it back? No, he is not buying his shares back. So that's not propping up his stock. And sells in billions. 24, 58, 31, 65, 53, 83, 96. Who doesn't want to be in Elon Musk's camp? EPS, earnings per share, 163, 362, 430. What a great company. All right, downgraded on January 7th by Bank of America Securities. Well, who believes what they say? We don't believe what you say anyway. Downgraded. My goodness sakes, this is Elon Musk. All right, reiterated. Barclays, equal weighted. They say it's going to 325, and it's currently at 426. Do you believe that? 325. These guys are wrong a lot. They're not as good at determining how far markets are going to go as we are. We're better at it than they are. I don't know. That's where they say it's going. They say it's coming down. Could it come down? Certainly could. If you draw your Fibonacci ruler in there, that's all they did. They drew a Fibonacci ruler in there and said that market's coming back down to 61.8. So you think those big boys don't use these calculators, these rulers? Of course they do. How else do you think they're making these projections? They're the ones who taught it to us. All right. So there you go. What do you think is going to happen with Elon? Do you think his cars are going to sell? You think that Model Y is going to sell? I think it's going to sell. That's a hot little car. That is a neat looking little thing. I think that's the best looking little car he's ever made. They all look about the same. Have you ever noticed the names of his cars? He started out with the Model S, and then he came out with the Model E. No, the Model 3. S, the Model 3, and then he came out with the Model X, and then he came out with the Model Y. S3XY. It spells sexy. Did you know that? Did you know he did that on purpose? The model S3XY. His model spells sexy. Elon. Elon, he's a funny guy. At least he's got a sense of humor, right? Okay. All right. That's Tesla. These guys think it's coming down. They think we're going to get an ABC pattern off the top here. We certainly could. I mean, I don't want to, I don't want to, this what it got. That would be your ABC pattern. A, B, C, D, and down it'd come to that 100% projection, right where they say it's going to be 61.8. That's where it's sitting right now. This is actually not a high. Well, actually, I take that back. I was going to say it's not a high probability because that would be, if that comes down off the backside, that would be your X, but it's not. It's not. Why? Because it's the third drive. This is the C drive. This is actually a C1. The probabilities of this thing going up are higher than they are going down. Because that would technically be, if that's a C1, this would be, well, it's a C1. It's a C1. You can't call it something it's not. It is. It's a C1. This would be your, right here, this would be your X1 right here, right? X1. This is your X2. So these are your probability statements. So we're just reading probabilities at this point. That's how we read these. X1, X2. And that makes that, and of course, that would be A1 down here. If we're just going to do the whole, label the whole damn thing, A1, then we're going to come in here. We're going to go in here. This is a B1. So there you go. There's your B1. Here's your A1. This is your C1. And then if it broke, it hits those blue lights and comes back down. It's going to put a set of blue lights underneath, and the blue lights going up. So remember, these blue lights are just mathematically calculated trend lines, and they're automatically calculating for us or mathematically measuring out an Elliott wave. That's what we're doing here. So this is an Elliott wave pattern. I just label them. Well, I label them a little bit different than Elliott wave. It makes it easier to understand. And then we can put probability statements to it. And we can say, okay, a B1 is X number of probabilities. C1 is not as high as a B1. B1 is not as high as A1 for probabilities, right? As the market continues to rally and goes higher and higher and higher, the probability of it continuing gets lower and lower and lower. So that's why as they go up the label, A1, B1, C1, it's hard to know what an A1 is, though. We oftentimes say, don't always, jump on the A1s because there's lots of false A1s, right? Like here's an A1, here's an A1. So here's an A1, here's an A1, here's an A1. We get lots of A1s, and you get lots of false breakouts on A1s. So we'll oftentimes tell people, warn you, don't jump on all the A1s because all the A1s oftentimes fail. It's the A2s are the ones that you want to get into, the A2. So this is an A2, and that's the second breakout after the A1, which is the ABC pattern. So that's your A2 right there. And you oftentimes hear Ross Cameron say that same thing. He's like, don't get in on the first break of the breakout. Now he doesn't call them A1s, A2s, A3s because he doesn't use that terminology, but he uses that ABC pattern, right? He says it's the ABC pattern, and we don't want to get in on the first one because we don't know if it's going to go and succeed. We want to get in on the second one, the ABC pattern, because that's what that is. That's your little ABC pattern like that, right? That's what he trades. He trades those A2s. And I tell you all the time, too, same thing. We don't want to trade the A1s because we get lots of false breakouts. Wait till you get an A1, and then it gets a little pullback. And then when you get the first candles break new highs coming off of that little pullback, that what we call the A2, that's the one you go in on. Okay, and then, of course, we got an A3 in here as well. Got an A3. And generally, I mean, you can get A4s and A5s and A6. You can get a B1, B2, B3, 4, 5, 6. Usually we only get 3. It's just like, it's a fractal. We get 3 drives, and inside of each one of the A drives, we get 3 drives. Inside the B drive, we generally get 3 drives. Inside of the C drive, we generally get three little drives. All right. And that's Elliott wave theory. And if you're not familiar with it, you can go study that a little bit. If you want, I have a book with all this stuff in it. All these probabilities, A1s, A2s, A3s, how to count these things, Elliott waves, Fibonacci's, all this stuff so we know the probabilities of where we're at in these trends. You can go get it out of my book. It's called Stock Market Playbook of Strategies, the manual for the class. You get it on Amazon. Go search Lan H. Turner. You have to put the H in there. If you don't, Amazon can't find me because I'm not that big of a guy, right? I'm just a little guy. So you have to be very specific and tell them you want land H Turner. And then my book will pop right up. Don't get the used one. Don't get the old ones. We had a student who did that. Got a used book thinking he's going to save some money. And he ended up getting the old version. So somebody sent him the old version. Don't do that. Just get this when it's, it's going to cost you an extra $2 or something. Spend the extra $2 and get the latest and greatest version. All right, it's 238 pages, 8.5 by 11. Every single page is full color. It's only like $35-$40 or something. It's a really good book. Go get it. It's the manual to the class, and it's going to teach you all of this stuff that we talked about, all this technical analysis stuff. All right. So that'll help you know what X1s are, X2s are, C1, C, and all the probabilities. And if you don't know the probabilities of trading, you have no business trading. You shouldn't be trading the financial markets if you don't know what the probabilities are. That's like going to Vegas and not knowing the rules on blackjack and sitting down at a blackjack table and think you're going to beat the market or beat the dealer. You ain't going to beat the dealer if you don't know the rules of blackjack. Well, don't come and play in the big world of the financial markets if you don't know the rules. If you don't know the rules and you don't know the probabilities, why in the hell are you even in this game? Right? I mean, learn that first. That's what a demo account's for. That's what education's for. That's what books are for. That's what videos are for. That's people who have done it. That's how you learn, right? You go and listen to somebody that's maybe a chapter or two ahead of you in the book, and then the Sunday school manual, and you learn from them. So I'm a couple of chapters ahead of you, maybe. If you're in this class, I'm probably a couple chapters ahead of you. There's guys that are a couple chapters ahead of me. I have people I listen to and learn from as well. But I've been doing this a long time, and I've gone through the chapters quite significantly. But there's always new things to learn. I mean, and there's always new stuff coming out all the time. I mean, these markets, believe it or not, I mean, as stagnant as they seem as far as technology wise, I mean, we get technology that changes all the time. Stock market is the stock market, right? The stock market is the stock market. If you'd bought Apple 35 years ago and still been in it, you'd probably been okay. You'd done all right. But did you do that? I didn't do that. That's not the way I traded. I didn't just buy and hold for 40 years. Most of us didn't. Even if we've been dabbling in the market for 35 years, maybe. I mean, you might put your money in a 401k. That's what I did. In the beginning, I did the same thing as everybody else. I put my money in a 401k and, just pumped it in there. Now, what does it turn out? After 30 years, you got a couple $100,000 and you think you're going to be rich beyond your wildest dreams. 35 years ago, they told you if you had $200,000, you'd be able to retire. Right. Now they tell you need $2 million, right? So you guys who are now young, 25, 30 years old, and they're telling you need $2 million to retire in 40 years, you're going to need $6 million to retire in 40 years. So the game is rigged against you, and that's just the way the cookie crumbles. We're going to have to figure out ways to trade and make more money than, we talked about this yesterday. You got inflation that just eats your lunch, and it takes everything you make, and then taxes on top of that. So you got inflation and taxes. Inflation is nothing more than just another tax. It's just a way of taxing your money without you telling you that it's a tax. 2% is what they want, right? Right now, what do we say it's at? Almost 4%, 3.5%, something like that. So that's just a 3.5% tax on top of your already 35% tax or 25% tax or whatever you're paying to the Fed, and then another 10% to your state. By the time you end up, taking any money home, they're taxing you, including your dog tax and your cat tax. You're up over 50%. Sales tax, everything's tax. And then when you die, they tax it again. Death tax. So by the time you're done, man, there ain't nothing left. So we got to figure out ways to beat the system. And about the only way we can do that is to come into these financial markets and find some leverage. We got to have leverage. You know what leverage is, right? Leverage, put an elephant, right? You got a lever. Where's that fulcrum? You got to move that fulcrum as close to that elephant as you can get. And, I got to be careful. You don't want to break the fulcrum, but, we got to have a little leverage sometimes. And that's what options are. Options give us leverage. They give us the ability to make more with less. And so we do options. And let's go over and look at meta while we're pontificating here. We're going to look at some of these, and then we're going to go over, I think we got paid today in our dividends. We're going to go talk a little bit about our dividend portfolio. And I'm going to walk through that, show you a little bit how to get to it. I did post it out there for you guys who have Pit News Magazine. I posted our new spreadsheet. So I'm going to walk through it with you. So let's see. Let's go to Meta. Meta. Let's go look at Meta. So Meta, we sold an option right here. And it's down a little bit because Meta didn't, I mean, it rallied yesterday, but now it's pulling back. That's okay. We're not worried. This is the soul. We're going to get $2,325 out of this one, no matter what. And then if it comes down and closes below that red line, there we're going to get some shares of Meta too. Now let's go over and look at the fundamentals of Meta. Meta. Where is Meta? All right, META. All right, there we go. Like, it's just going sideways, making a nice little pattern. We saw that over in track and trade, but let's come down and look at the fundamentals. Now we got some problems here. First thing we see is that he's buying his shares back. Okay, every year he's been buying some shares back. That's not good, Meta. But why is he buying shares back? You have to ask that question, because they'll tell you, oh, it's so that we can share our profits with you. No, it's not. That's just their bullshit line. They tell you that to make you feel good about it. It's not. It does. It props up their stock. So if you own their stock and they buy the shares back, yes, it's going to prop your stock up, but you don't want that. That's false. That's a false signal there. You don't want them buying their shares back. They're buying their shares back. That means to me and that, well, oftentimes like, well, we got so much cash. We're just going to give it back to you by buying our shares back, and that'll prop up the stock, and that's how we share it. Yeah, bullshit. That's a bullshit line. Well, they're buying their shares back to prop their stock up to make it so more people will stay in their stock and won't bail out. So the sales in billions, this is what's important. Look at this. They're making money hand over fist. I mean, old Zuckerberg, he's doing well. He had a little bit of a down year there, 117 to 116. Remember that? Everybody thought Zuckerberg was going to go out of business. Nope, he's back. He's back. He went down and bent the knee to Donald Trump the other day. Did you see that? He's going to get rid of those fact checkers. Did you guys hear that? He's getting rid of fact checkers so that there's not somebody out there telling you what the truth is. And then he's going to do what Elon did, which is community notes. So now, if you think somebody's telling you lies and BS on Facebook, you can go in and request community notes, or you can even make community notes. You can be a part of the team to put community notes on. So you can, the community is what decides what is the truth. And they'll go fact check these guys and not have some government agency of truth, right? Like on Harry Potter, the truth agency. Only we can tell you what the truth is. So none of that bull crap anymore. So maybe Zuckerberg's gonna, maybe he's gonna pull his head out. I think he doesn't want to go to prison as what. He's just down there like, I promise I won't lie anymore. I promise we won't suppress the truth anymore. And so he did that little thing, that little dance. Oh, we'll get rid of the fact checkers. Of course, you saw Joe Biden's final speech saying, Zuckerberg, you can't do that. We need the ability to suppress speech. You can't go out there and, oh, this is a terrible thing. I don't know. I guess it depends on what side you're on. If you think you know all the truth, you want fact checkers to come in and tell you what the truth is. So that's what's going on with old Zuck, and that's what's going on here with Meta. Meta's going a little bit sideways right here. Let's go back over to track and trade for a second. Yeah, this is like a little triangle wedge formation pattern up in here. What's the drive pattern on this? This is like a double. This is drive 1, drive 2. This is almost like a reset. I don't know. Then we got a drive 3 out of it. So we really did get 3 drives. Now we're up here with little ABC. Technically speaking, this thing, we got to go look and see, because this would be the one that you'd come in and say, this is the one that's going to flush. We take our Fibonacci ruler all the way from the bottom to the top, and that's putting us back here into the Fibonacci sweet spot back in here. Now we sold an option right here to try and get some shares. So we've gone through if you look at the Wyckoff accumulation distribution model, and again, what the heck is that, Land? Wyckoff accumulation distribution. It's in my book if you want to know. All right, you really do need to know. Wyckoff accumulation distribution. Go do your research and learn about that as well. So that's going to be something you want to know. So we're coming into the distribution stage, possible distribution. That means they drive this market down so that they can buy low, sell high, right? The name of the game is to buy low, sell high. And that's what the big banks, hedge funds do. Again, you always hear me say they have all the money in the world. The only money they don't have is what's tinkling in your pocket. And they want that too. All right. And so what they do is they manipulate the markets to the point where they drive these markets up. We get in, we buy. We get a full load of all of our money up in here, and then they dump it and take it all back. And then what do? Well, we start sell. They're while we're buying, they're buying, buy. So they buy down here in the low, they drive it up, then they take all of our money. And that's how they take our money, right? So you got to be careful, because that's how these big banks and hedge funds manipulate the markets. And that's what get these drive patterns in here. And generally speaking, you're going to see, here's a perfect little bow tie, Fibonacci bow tie. See how it goes down? They drive it back down about half or 50% of the last move. So it went up. They drive it back down half. Then it come down here. It went all the way up here. And then it went up. See how it went doubled to here, all the way up here. And then it comes right back down, right down to here. And if you tie that off right there to that level right there, then you see that they drive it down, they drive it up, they drive it back down. It comes down to the previous level. That's called a Fibonacci bow tie. All right. And so we got another one right here, Fibonacci bow tie, down, up, down, tie it off. All right. Now we're going to get another little bow tie in here, up, down, and then we could tie this thing off, right? So if that's the case on the way down, that thing could come down into this Fibonacci sweet spot. That's what the model is telling us, that this thing's coming down. Whether it is or not, I mean, we got, again, the fundamentals will change the fundamentals can change the scope of a technical pattern like this, a mathematical modeling pattern, because you might get a lot of positive fundamentals and they'll drive the market up. And that happened to us with the elections, right? We had that nice little 3-drive pattern on many markets, including like the S&P and the NASDAQ. And then suddenly we had the election, Trump was elected, and bam, that thing shot out the top of that 3rd-drive pattern, made a 4th drive. Really rare. But a fundamental event like that can cause that to happen. And then it turned and it flushed and it came back down after that. And so that's where we've just been kind of recovering. There's Frosty. Good to see you in the morning, Frosty. Nice to make your acquaintance, have you in the class. All right. So as we come across here, what we need to do is we need to go back and look at the fundamentals of Meta. Let's go look and see. But he's doing pretty good down here. You can't complain about it. Buying his shares back a little bit, but his sales are crazy and his earnings per share pretty good. See, last year he had a little problem. Everybody was worried about him. But they're saying right now, reiterated, they're saying buy, and they're saying the target price is $715. That's by the end of the year, $715. And it's currently trading at 609. So they're all estimating there's some upside potential in this. Does it mean there's not some downside potential? Nope, there certainly is, as we just outlined with the Elliott wave patterns and stuff. But there's some movement in there in this market. So let's come back over and look at the next one. What's the next one we got to look at? We looked at Google, we looked at Amazon, Apple, Meta, Microsoft, MSTR. Now, MSTR is not one of the Magnificent Seven. Not one of the Magnificent Seven, but it's Bitcoin, all right? Or it's a company that invests heavily in Bitcoin. All right. If we wanted to look at Bitcoin itself, this is the ETF of Bitcoin. It's not actually Bitcoin. It's an ETF of Bitcoin. We could look at BITO and look at BITO. And now, again, we talked about this earlier at the beginning of class, that many of us have options on BITO. And we got into those options right down in here. All right. Right as it broke that line right there. Remember our nice little trend line that came down? And that's where we actually it was right here, wasn't it? Right here is where we bought all of our BITO options. So we're still in those. And now it's coming in. And it's making a nice little beautiful ABC pattern. So this was your opportunity to buy low, sell high, and it's breaking now. It's breaking those blue lights, and we're anticipating a continuation of the uptrend. I've been loading up on Bitcoin. I bought one Bitcoin, a bunch of Bitcoin. I didn't buy a bunch of Bitcoins. I bought a bunch of Bitcoin. I bought one Bitcoin right here at the same time that I bought the options. I also bought a Bitcoin, and I put that out. It's out on the internet. You can go see my video on that recommendation right there. When that took off, I said, we need to buy it, load up on our Bitcoin because it's getting ready to go. It's the bottom of a 3-drive pattern, and away this thing went. And it did go. It went good, and we had some good fundamentals to go along with it. Donald Trump's all on board with his Bitcoin, telling people, don't sell your Bitcoin. He's going to make that thing sing for us when he gets into office. I was really worried that Joe Biden was going to sell all the federal government's Bitcoin as a parting gift, and he still might. He's still in there for another couple of days, and we haven't heard what he's going to do to half the things he's done has just been in spite of anything Donald Trump has wanted to do. So we're going to have to see how he spites him one more time, because we got some surprises coming. And I hope it's not that sorry, just boop, boop, signed all the Bitcoin away. It's gone. And if that happens, but I'm not so sure that's going to happen, because I was talking to Chat GPT, and I mentioned this yesterday in class or the other day in class. I talked to GPT. I had a long conversation about what it would take for the federal government to sell off all their Bitcoin, and it would take quite a process. So I think we would know that if he was in the works of doing that. I don't think he could pull that off behind the scenes and surprise it on us like that. And so everybody's getting excited right now because Trump's going to go in and Bitcoin's going to be safe, I guess. There's lots of models of things that they can do with the Bitcoin. There's actually some models that some of these guys are talking about that could actually pay off the federal debt with Bitcoin if they'd be willing to do it. It's kind of a big, it's kind of a crazy idea, but we got Elon Musk in there, and Elon Musk, he's a crazy dude, right? I mean, he knows how to make shit happen, and we can't not discount that. So if he can pull some of this stuff off, there is a way we could pay off the national debt using Bitcoin. And if that's the case, Bitcoin's going to go to the moon, and that's what would pay off the national debt. Now, we'd have to have a lot more Bitcoin to make that happen. So the federal government has been saying, or Trump's been saying, and they've got bills in Congress to say they're going to buy lots of Bitcoin. And that's a Republican bill, and the Republicans have the House and the Senate and the presidency. So there's a possibility that this could all go through and really be a good thing. So if you don't have your Bitcoin, this will probably be the last time you'll get an opportunity to buy it at this low. So at least start piling in some Bitcoin. I bought a whole bunch more, as much as I can afford. I've been throwing all my, I've been getting my dividends that we've been talking about, and every penny of that I get, I don't just reinvest back into the thing that gave me the dividends. I've been shoving it into Bitcoin. So I got a whole bunch of Bitcoin. I'm up big today. I mean, this is a nice move for me today. And I've just been buying Bitcoin, just slowly dollar cost averaging it as it's been coming down. Come down and touched our magic red line right there, which is our delta Kona probability calculation, right? Our Fibonacci sweet spot. So it came right back like a train on rails. We had to suffer through a little bit of a drawdown in there, but it wasn't. I mean, it was a little tough to sit through, and we cried a little bit, but that's okay. We know as long as it stays within the mathematical models, we don't get too concerned. It's when it breaks out of those mathematical models and does something other than what we expect that we start to, get a little nervous. So if you don't know these mathematical models, you're going to probably be nervous anyway. I mean, you're nervous anyway, even if you know the mathematical models, but at least you can look at it and say, well, it's, train on rails, so I'm not too worried about it. It's when it's not doing the mathematical model and you're in it and you're going, oh shit, what's going on? Why is it breaking out like that? So now we're getting down here. We got the little blue light system coming in here, and we're going into our next drive high. We're going to look for this thing to come up and test these previous highs up in here. So if you didn't buy your Bitcoin and you missed it down here and you were like, oh crap, I can't buy it now, it's too high. Well, this is your opportunity. This location right here today is the same thing as this location was back when we did it back there. It's the lowest you're going to probably see Bitcoin in a while or ever again. I don't know. I'm just making a guess, a scientific wild ass guess, just like anybody else. I'm a speculator, meaning I don't know what the hell's going to happen. I'm just making a guess. And if you guys want to do what you do, you do what you do. Don't do what I do unless you think I'm doing what you want to do. Does that make sense? I'm not here to tell you what to do. I'm just telling you what I'm doing. All right. I am not a financial advisor, and I am not here to tell you what to do. I'm just telling you what I'm doing. And I'm doing pretty good. I can't complain. All right. I got enough food to eat and enough cars to drive and an airplane to fly and a couple buildings and a couple of rentals and a couple of dividend paying stocks, and I'm doing okay. I'm not going to hurt. I'm not hurting right now as long as the world doesn't collapse. All right. Now, I do have a backup plan. I do have a backup plan. I got a buddy who's got a ranch, and he's got a spare bedroom for me in case I need it. And he's got lots of animals and pheasants and birds and things that we can eat if we need to. So I got a place to run to if I need to, got a backup plan. And I'm going to invite you guys over to that ranch. I wanted to make sure you guys realize that we are going to all get together and go to the ranch, and you're all invited to come to the ranch and shoot birds and hang out. And we're going to talk about stocks. And we're going to talk about dividends. We're going to talk about all kinds of fun things. I always complain, I don't have a lot of friends. People don't call me to go do things. And my wife says, well, why don't you call them to go do something with you then? I said, hey, you know what? That's a good idea. So I'm putting together this thing for all my buddies and friends and pals. That's you. So you guys are my buddies and friends and pals. We're all going to go to my buddy's ranch, and we're going to hunt pheasants. We're going to hang out, sit by the fire, talk about stocks, and ride four-wheelers and go golfing and do all kinds of fun stuff. Actually, the first one's not going to be the golf and the riding four-wheelers activities. We're going to go down there and we're going to hunt pheasants. Pheasant hunting season is almost over. There's only 2 months left, February and March. That's all we can hunt pheasants. So we're going to do pheasant hunting in the next 2 months. And I'm getting that information all pulled together so you guys can come and join us. I want everybody to come. You can fly in from California, Texas, or Nevada, or New York City if you want to, or Florida. We got all kinds of, we got great accommodations. He's got plenty of beds for everybody, bedrooms, and it's a dude ranch, man. It's a private hunting club, and we're all going to go there and hang out and goof off and talk about stock market. And it's a tax deduction because we're going to talk about stock market. It's an educational environment. So that's what we're going to do, and you can come and have fun with us, and I want you all to come and do that. All right, so I'm excited about that. We're going to do that probably the third week in February is the first one. So get your ducks in a row. Make sure you're all ready to go, or pheasants in a row, as it may be. All right, get your pheasants in a row because we're going to all go. Go get your, go clean that shotgun that you haven't shot for 12 years and get that thing warmed up and ready to go. He's got skeet, so you can come down there and practice a little bit before you go out into the field and shoot some real birds. If you don't want to go shoot real birds, that's okay too. You can just come hang out with us and go out and shoot some clay birds. That's okay. Whatever you want to do. It's just going to come down to the dude ranch and hang out. It's just a relaxing week, the weekend, or a couple of days. We're going to come down there and have a good time. I want to meet you guys in person, so we're putting together something for us fun to do. All right, so we'll do that. All right. That's Biddo. Well, the last one we were going to look at, we haven't looked at yet, was Mags. No, Mags is the Magnificent Seven. That's the combination of all these markets together. Meta, we looked at all these. Oh, is MSTR. MSTR is a company that invests very heavily in Bitcoin. And so it's not Bitcoin itself, but it's just a company. It's a software company that invests in Bitcoin, and they have a lot of Bitcoin on their balance sheet. So if Bitcoin goes up, their balance sheet goes up. So that's what this is all about, MSTR. And that's a good stock. We put some options on there, $3,795. We'll get that. It's up $785 right now because Bitcoin popped. So that's a way of putting options on Bitcoin. We don't really go put, you can put options on Bitcoin. You can put options on Bitcoin through Biddo, and we did that, right? But there's also, if you want to do options on Bitcoin, you can do it through it's kind of a roundabout way to do it, but you can come and do it over here on MSTR. All right, so let's go look at MSTR fundamentals. All right, what are they saying about MSTR down here? First of all, they're buying some shares back. Well, they had a little bit of an issue where their stock was kind of, Bitcoin wasn't doing anything, and for a couple of, for last year, they didn't do a whole lot, right? They had a little bit of a run. That was Bitcoin last year. Didn't do a whole lot. It had a nice run back here. This was a good run. All right. But if you come back and look, this guy's been buying their shares back. And I never like to see that. I don't like to see that. But they did it. But look at their sales in billions. They've been, even though they got a bunch of Bitcoin on their balance sheet, they don't sell the Bitcoin. It's just an asset. It's where they put their cash. So that's probably what they're doing here. They're probably taking some of the money that they're using to sell off some of their own shares, and they're buying Bitcoin with it. I bet that's what they're doing. In fact, I'd bet anything that's what they're doing. That's what they're doing, because I've listened to this guy talk. He's amazing. He's the one who's built the whole model on using Bitcoin to pay off the national debt, and he's friends with Don Trump Jr. Those guys are buddies, so he's got the ear of the president. So they're making sales, man. They're selling their software, so they're a big company. They're making sales. Look at that, $134,000 in sales, or $1 billion in sales. That's a big company. $134 billion in sales. They had a little bit of a struggle right there, 21, 22, but most companies did. We saw Meta had the same thing, and then. So earnings were down a little bit, but look at this. Earnings are all the way back up, all-time new highs in 23. This is 1487. What's their sales are at 156.23 right now. This is the current information. 156. Look at that. And last year they were 134. So they're kicking ass on sales. And forward PE ratio is, look at that. PE ratio right at 28.67. Last year was 14.87. They're at 28.67. This is an amazing company. Not only are they making sales and doing well with their product, they've got more Bitcoin sitting on their balance sheet than Carter's got peanuts. They are a good company. All right. Wait a second. That's Meta. We already know Meta's a good company. Here I am talking about this company as if Meta's that company. That's Meta. We like Meta. Meta's doing well. What's this one? Here, I didn't switch it over. Micro, MSTR. Let's go look and do this correctly. MSTR land, MSTR. I'm sitting there talking about them guys as if it's Meta. Okay, let's see if these guys. Oh, well, sales in billions, not that great. Oh, earnings per share was down. Earnings per share is back. So I was going off on Meta. Meta's a really good company. We're really happy about that one. Meta's kicking butt. Shares outstanding, though. Look at this. They're not buying back their shares. They're issuing more shares. That's good news. I hate it when they buy back shares. They're okay, here we go. They're issuing more shares. Well, that would raise money, wouldn't it? Maybe that's what they're doing. They're issuing more shares so they can raise money to buy more Bitcoin, as opposed to buying back shares. You buy back shares, you wouldn't be buying Bitcoin with money that you're buying back shares. You buy back shares, that doesn't make any sense at all. You'd have to sell shares. You'd have to issue more shares to make money, to raise money so you can buy more Bitcoin. That's what they're doing. All right. That makes more sense. Okay, sales in billion, that's not as good as I thought. I mean, you can't complain about that. I mean, look at this, $496 billion in sales. But they had $499 billion last year and $510 billion last year, the year before that. So they're actually going down a little bit in sales. I was sitting here thinking that this was Meta was them, and that's not them. These guys are reiterated. Maximum Group 270 is where they think they're going, and it's currently at 386. 270 is clear down here. Well, Bitcoin didn't go down. Again, these guys have a lot of Bitcoin. Look at this. I'm a little disappointed. 1212, they had a hard time, but they came back to rock and roll. Where are they at right now? We got to go look at current sales. 467. Oh, that's down. Their sales are not doing well. Shares outstanding. They issued some more shares to raise more capital, probably so they can buy more Bitcoin. Well, their fundamentals aren't as good as I thought. I'm not as impressed with their fundamentals. The incoming Trump inauguration sparks crypto frenzy, up 6.35%. And again, that would be because they have so much Bitcoin on their balance sheet, but their company sells a little flat. But I mean, you can't complain about 496 billion, but it's not growing. They're just, and their shares outstanding. They issued more shares so they can buy more Bitcoin, I think. Earnings per share is 264, and they don't list an earnings per share right now, a current one. Trailing 12 months, it shows is down 2.11. They're making all their money on Bitcoin, not on selling their software. All right, well, this guy's smart. He's really smart. He's the one who's done the model to pay off the national debt. Anyway, it looks like Bitcoin. This just looks like Bitcoin. That's all it is. Okay, so that's the one I wanted to bring up and talk about. What did we do over here? We put an option on it. So we sold an option right here to click up some premium. We wanted to get a long position if it would give us we wanted to get some shares, right? We want to buy 100 shares. It'd be $35,000 of how much we got in our account. We got $141,000 cash balance. Buying power, we got 139,000 because we're on margin. 3,700 collected. We collected 3,700 on that. It's currently sitting at 777. That's a lucky number. It says 780 over here. Oh, just switched. Okay, can't complain about that. We're doing okay. This is the only one that makes us look bad right now, but we're not really in bad shape with that. Don't really feel bad about that one. It'll come back. It'll all come out in the wash. Apple's the one that's dumping. Look, Apple's dumping. We should have bought a put option on Apple, not a call, not a long position. We sold an option here. It means we'll get 100 shares of Apple at that price, and we'll receive $530. Apple. Jeez. Maybe Apple ought to get some Bitcoin on their balance sheet. Okay, let's pull up our spreadsheet. UBU, UBI, my UBI, UTU class UBI. All right, universal basic income. Now, the reason I went through all the Magnificent Seven today is because that's primarily what we're going to do. Now, I haven't closed out any positions on this, so I can't come and enter them. You're like, you're down, Land. You're going to lose money. Well, we'll put that into our spreadsheet when we do. Don't worry about it. I'll record it. I'll record our losses. We got to record our losses, not just our wins. I never did record the loss from our day trading the other day, though. I still can't remember how much it was. Let's see. So if we're going to come in here and notice, the reason I went through all of these is these are the Magnificent Seven. All right. And then we have MAGs, which is the all 7 of these combined. So I have Magnificent Seven and I have Bitcoin. I have Bitcoin in there twice, BITO, and we're going to use MSTR as our Bitcoin. So that's what we got, Magnificent Seven and Bitcoin. So what I've been doing is I've been taking the profits from my cash cow portfolio, and whenever it gives me dividends, I just plow it back into Bitcoin. And so I'm up really nice. I'm feeling really good right now. I am feeling really good about it because Bitcoin went back up over 100,000. And as I said, I have 1 Bitcoin, and now I have about like almost 1.3 Bitcoin because I've just been plowing my profits back into Bitcoin, and now it's up big. So this is my my new calculator. All right, my new calculator. Now I told you I was going to do a new calculator. Can't remember, did I pull it up and show it to you yesterday? This is the cash cow portfolio that we talked about. And if you want this spreadsheet, again, as I mentioned, you can go out. For those of you who have Pit News Magazine, I used to just give this away for free here on the YouTube channel. I just didn't care. I was just like, oh, here's the URL. Go get it. Go download it. But then I started hearing that some of my students showed me videos where somebody's been using my spreadsheets and my stuff that I just used to give away for free out on other YouTube channels. And I've still got some stuff out there for free. If you just go over to, for example, if you just go over to pitnews.com. If you go to pitnews.com, this is where you subscribe to the magazine. But if you come over here to the store, see the store? That's where you can buy my book right there. You can get the digital version for $30. The paperback version is $37.7 out on Amazon. I recommend you just go get the paperback version. It's not that much more, and then you get to lay it out on your desktop and stuff. So stock market cheat sheets, those are here. This is free. This is the decision point trading stuff. This is the slides that we do out on YouTube all the time. If you just click that, I don't ask you for your email or anything. It just pops right up and you get that book. I don't even ask you for your email. I don't charge you nothing. And this is a big document. It's like 184 slides. It's the slides for the class, right? So it has everything in there. Has you come down, you can see it's just free out there on and I give this away, but now we're starting to see guys use this and put it on their YouTube channels. So I may put that behind the Pit News wall too. So sorry, guys, things are not going to be free. People stealing my stuff. This is the stock options playbook. That's free too. I don't charge for it. You just click on it. I don't even ask for your name or nothing because I'm not that kind of guy. I'm not going to spam you. I don't care. Of course, I do want you to come to my ranch and hang out. And I don't have any way to contact you. So I ought to ask for your name and number so I can send you invitations to come to the ranch. Prepare for your retirement. This is another document I just give you for free. I just like write all this stuff and put it all in here and tell you nice little ways to do things. And I just give it to you for free. I don't even ask your name, but I guess I should. I should ask your name because then I can invite you to the ranch. If I don't know who you are, I can't send you an email to invite you to the ranch. And then people don't steal it and put it on their own websites. But to get this stuff, you can just go over here. So there's still a couple of them for free, but I'm going to put those behind a wall, give me your name so I can invite you to the ranch. And then also so that they don't show up on other YouTube channels. And then, oh, look, there it is. Pheasant hunting dividend investing classes. There's the link right there. Hunt for Success, a pheasant hunting retreat with financial training. That's the main cabin. That's where some of you might stay there. You stay in that main cabin. And then this is about the seminar that we're going to talk, the financial seminar. We're going to learn all this neat stuff. I got special stuff I'm not going to teach on YouTube. I'm only going to teach at the ranch. Hold stuff back from you guys here on YouTube. That's not very nice, is it? But that's the nature of the beast. You got to come to the pheasant ranch to hang out with us. This is where we're going to hang out. This is the playroom. This is the big, great room. These are the bedrooms. This is where we're going to teach the class. Right here. See that? That's the classroom. They're going to have fun in there. We can't have very many guys. We can only have 15. So if once it's ready to go, man, you better jump on board because otherwise you miss out. We can only do 15 at a time. We got one in February, one in March. This is the accommodations. So this is where you're going to stay. Again, some of the pictures. That's me right there out hunting pheasants. That's me as a child. That was a child. No, it's not me. And this is the ranch. Here's the map of the ranch. Here's where you go hunting pheasants all around the ranch. And here's that's the main lodge. That's the one you just saw all the pictures in. There's the clubhouse. That's where we hang out most of the time. There's a pickleball court. There's the grassy knoll. Then we got the bunkhouse down here. This is where some of you will stay. This is the trap shooting. We got a swimming pool, hot tub. This is a nice place here. Up here, this is the barn. Actually, we call it the barn, but people can sleep in there. We got 2 or 3 bedrooms in the barn. This is the pheasant hutch. We got the cottage up here. This is a really nice place. It's a lot of fun. It's right out in the middle of nowhere. I mean, you got to go. You drive out there and you're like, there ain't nobody around. But if you want to go shoot guns all day long, you don't want to be next to people that are going to complain about gun shooting, right? So got to go out in the ranch, and then this is where we hang out. A really nice place. This is your accommodations. We get each one, the main lodge, how many beds and bedrooms and stuff that are all in there. We got 2 adventures, one in February, one in March. Both of them are going to be pheasant hunting. If it goes well, and we got a lot of guys and they want to come and they want to do this again, we'll do another one in April. But April, we can't hunt birds. Bird hunting is over. So in April, we're going to go ride 4-wheelers up in the mountains. All right. We're going to go on a big 4-wheeler hunt. We got all kinds of ideas if you guys really want to come and do this. If you don't want to come and do it, nobody comes. Well, throw the idea out the window. Everybody just wants to do Zoom meetings and sit in their underwear. But you know what? We got to live life. We're making all this money in the financial markets. We got to go spend it on something fun. All right. Again, secure your spot soon. Only 15 people can do it. Here's the schedule. Come and arrive 2 o'clock in the afternoon, go pheasant hunting, relax, have a gourmet dinner. It makes really good dinner. Got this great big kitchen with all this great big, got a whole bunch of stoves in there and stuff. Makes really good food. We got breakfast, and we're going to have lunch, and then we're going to have our workshop. We're going to talk about trading, come back, have another hunt, go back. If you want to stay for 2 days, you can stay for 2 days. 3-day adventure, you can do a 3-day adventure. We're going to have a lot of fun. This is he even does it, not just pheasants. We got partridges that he does, what to bring. We got everything in here for you. So no questions. What do you need for the financial seminar? If you're going to come into Utah, you don't know what to do, explore Utah. There's all kinds of fun things to do. This is the brochure. You can go 4-wheeling, you can hunt birds, why people return, because they have such a good time, of course. And then how to contact us and how to join and how to get in. This is the directions. This is where it's at right there. See, there's Utah. There's where it is, that little star, right dead center. So you can go up from St. George and come down from Salt Lake. It's equal. Fly into Las Vegas and drive in. You can fly into Salt Lake and drive down. And then out of state, here's the place we recommend. And then we got a release so you can come and hunt with us. All right, man. That's cool, right? A lot of fun. We're going to have so much fun. I'm so excited about this. I can't stand it. I'm so excited. I can't stand it. I can't stand it. I hope you guys will come. I haven't quite got everything ready yet, but if you just call that number right there, 872-222-54. Leave your phone number, leave a message, and say you want to be there, and I'll call you back and we'll get you lined up. We can't just do it over the phone because it's kind of a unique situation with all the different places that you can stay. It's not like a hotel. You can't just go in and book a room because the rooms are all different, and it depends on whether you're bringing your wife, your kids, your family, whether you're coming by yourself. And we'll look and see what you want to do, and you and I will work out because I got the whole ranch. I'm paying for the whole ranch. All right, so we're taking the whole damn thing. So the whole dude ranch is ours for 3 days. And that's the rooms right there. So depending on whether you got kids that you want to bring with you, whether you're going to bring your wife, whatever you're going to do, and then we'll set you up. Maybe you'll be in the bunk room, or maybe you'll be, if you got a bunch of kids or something, we can put you in some rooms that's got like twin beds, private beds, all kinds of stuff. 3 beds, 1 queen bed. Okay, so we're gonna have fun anyway. Come and do it with us. Come and do it. It's fun. All right, let's look at our portfolio. I think we're gonna get some money today. The thing is that I looked over and I got a notice on my phone that the dividends came in. Now they're pending, so they're not put into my account yet. They're just pending, but they did post and notify me. And I got to show you something else. I got something else I want to show you. So the dividends have come in. Let's go over. How come I can't get that thing to come up? There it is. It's right here. All right. So I think it was one of the dividends is that we put in here is MAGS. No, MAGS. MAGS is MAGS. That's the Magnificent 7. So if you want to just invest in Magnificent 7 through an ETF, you just buy that. All right. And then you wait for it to go up over 30 years and you'll be rich, rich, rich beyond your wildest dreams. Most of us don't have 30 years. So we need to do something else. And that's why we do something else. We do something that's got a little bit more aggressive strategy. YMAGs. They're not YMAGs. It's YMAG. This is the same thing, only they pay dividends out on it. So YMAG versus MAGs is the dividend version. And you can see down here, they're paying out dividends. And in this case, it's paying out 15 cents for every share you own. You say, well, 15 cents for every share, that's not very much. Yeah, but look at the share price. The shares are only $18. And so that's every week. It's not every month. And oftentimes you go look at some of these things, like if you go look at Apple, AAPL, they pay dividends, but they pay them every quarter, and they pay 25 cents on a $231 share every 3 months. Again, that's what I call the why bother. The why bother dividend project. But we're going to go into some of these others. And this is called the YMAG. YMAG gives you 15 cents every week on an $18 share. Now that's cool. All right. And it's the same. It's YMAG. So it's investing the money into the Magnificent 7, Apple, Amazon, Netflix, Google. If you think those guys are going to go out of business, then you probably wouldn't want to do this. But if you don't think they're going to go out of business, this might be a good way to generate some income. So what we're going to do is we're going to go calculate this, and we're going to see how much money we would make. The problem is that I got a notice on my real money account that I got dividends today, but they haven't posted it over here on FinViz, where we get our dividend information. See, we're missing a couple in here. The last one was on January 8th, and January 8th was last week. They did that on Wednesday. January 8th was Wednesday. So we're missing one. We're missing one. I'm going to look on my real money account. Hold on a second. I'm going to go see how much it was, how much they paid. The problem is the one on my real money account doesn't tell me doesn't give me the amount. They just give me the dollar amount. And I have to do math. Who wants to do math? Let's see. Give me 1 second. I'm going to find out what YMAGs, because I have some YMAGs in my real money account. YMAG. There it is. And I got noticed that we got a pending dividend coming in. Now I got to show you something too. How much am I going to get off of that? 2972. How am I going to do this? 2972. 14862. All right, hold on. I got to do some math. It's not as easy as just looking it up on the internet. 29. Oh, no. Let's go the other way. 148.62 divided by 2972 equals. Yeah, that wasn't very much. It was a little. That's weird. They said only 5 cents. They only paid 5 cents. That's all I got so far. But I got to show you something too. So let's go put 5 cents in. That's not any fun. So let's go see. We're going to come in here, and where's our dividends on this new spreadsheet? Right here, payments received. Now this is the model. Is this isn't the one? See, if we come over here to the legacy one, I got to move all this information over into the new cash cow one. I'm sorry, guys. I'll do that offline. I won't make you sit here and watch me do all that. I got to move it over. I was going to do it here in class, but we're running out of time. And for me to sit here and do all of this labor of moving stuff out of the legacy into the new cash cow portfolio is not going to be a lot of fun for you guys to watch. So we got to come in here, and it's just 5 cents is all they gave us on that one so far. It's all that's been reported, and we were expecting 14 cents. So it came in at 5 cents, estimated dividend. So we're going to come in here and put our payment, profit and loss, NAV, current NAV, invested amount. Where's our January dividends right there? So we got to come in and we got to add 5 cents for every share we own. 2,630.19 times 0.05. So we're going to get $131. So I'm going to add that in right here. So we're going to come in and we're going to go like this. We're going to go equals. Let me bring this out of the way. We're going to go equals, put our equal sign in there, 36757. That's what we got last time so far. And we're going to go plus 131.50. That's a little disappointing. All right, so now we got 499, but we got to put 131. I'm just going to put it down here in cash right now. We've actually got, let's go see if YMAX paid out. Well, let's put that in there. Oh, let's go put that in cash for right now. We got 131.50 or 51. 131.50 in cash. So let's go look at YMAX and see if YMAX shows that they paid out yet. YMAX. No, see, they're not updated either. And I got YMAX too. So let me go see what they paid out. Hold on. Got to look at my real money account. And see, it's not any better. They're doing, I think this might be a reconciliation month or week. 1, 2, 6, 0, 3, 4, 1, 4, 0.91. So if I do the math on that one, I always say, if you have to pull out your calculator, your software is not doing something right. Right? So this is 140.91 divided by 1260.34. It was 11 cents. That's better. 11 cents. So let's come over here. And in this one, it was 11 cents. So now we have to come in and do this math. Oh, you know what? Never mind. We don't have any shares of YMAX in our portfolio over here. It paid out at 11 cents, but we don't have any of that one. Tesla doesn't pay until the 27th. And Microsoft doesn't pay until the 12th of next month. We've already got our money on Microsoft. And Misty doesn't pay until the 19th. And today's the 7th, 2 more days until Misty pays out. So let me go see if they posted Misty. I have Misty in my real money account. Oh, we got money on Misty. All right. We're rocking and rolling here. Again, I'm going to have to do them. Well, let's go see if they posted that out here. We got paid on Misty today. Oop. Okay, let's go. MSTY. They haven't posted it on YieldMax yet, or they haven't posted on FinViz yet. So that'll probably come out on Monday, I guess. I hope they update their system. We didn't get it on either of the other 2 indexes. So let me do the math here. I'll do the math for us. 8767.48 3846.73. Okay. They just sent me a dividend of $8,767. That's real money. Just went into my account. Gotta love that. Okay, here we go. $8,767.48. 3841.73. They paid out at $2.28. $2.28. So let's go over here, and we have Misty. $2.28. How many shares do we have? Shares holding 1,700. So 228. Let's clear that. 2.28 times 1718.54 equals. Okay, so in our portfolio, we get to add January dividends paid out to us right here, $3,918.27. Boom. So we're going to take this number and add it to our cash account. All right, so we're going to come over here and we're going to go equals 131.50 plus, we'll just do this, make it easy. Boom, just like that. We have $4,049 in cash. Now, what are we going to do with it? We can put it back into something else. We can take that $4,000 and we can go buy some YMAX. We could buy some YMAX, and then next month when we get when YMAX pays out, we could get a dividend on them, or we could go put it into Misty. Misty pays at 125, and that's Bitcoin. If we think Bitcoin's going to keep rising, we could go put some more in there. That's what we just got our money from, Misty. SMCY, that's 120% return. You got to remember those. Some of these stocks go down, but that's not such a big concern because the way these guys make money, one of the things you have to realize, I got two things I want to tell you before I let you go for the day. This YMAX system is not traditional dividends, and we've talked about that, right? What they're doing is they're trading options on this Magnificent Seven and some others, if you want to choose something other than the Magnificent Seven, but they're trading options on them. And that's how they get these big dividends. Now, when the strategy that they're using is called covered calls, right? Plus they do synthetic longs. So they make money when the market goes down. They still make money when the market goes down. So you got to take that into consideration. You're like, oh no, the market's going down. Don't freak out, because YieldMax is trading options on these things. And if you're trading the YieldMax versions of these things, they're still making money because they're selling covered calls, which means they're going to collect premium if the market goes down. Now, they'll make more money if the market goes up, and the market's been going down, which is probably why some of our dividends are a little bit smaller this month, this period, right? We're coming off of a big downtrend. So we're still making money. We still got dividends. We still made money, right? In our dividends, even though the market came down, but that's because they still make money when the market falls. So when your NAV or your net asset value goes down, don't worry about it. It'll come back up. That part's not for you to worry about. That's for them to worry about. They're still making money trading options on that stock, whether it's going up or down. They make money with options when the market's going down. If you don't understand how options work, you need to take an options class. I know a guy that teaches one down at Utah Tech University here in St. George. His name's Lan Turner. If you want to go take his options class, he teaches that down here, and you can go learn about options, and you can learn how to make money when markets go down. So that's the whole neat thing about the way these guys are doing this, is that they make money even when the market falls. So you're all freaking out. Oh no, the market's going down. Doesn't matter. They're still making money, and they're going to pay you a dividend out of that. Now, they'll make more money when the market goes up, and so you get a bigger dividend when the market goes up. So we like markets to go up because we like to make more money, but it doesn't mean that when the market goes down, you don't make money. You're not losing money. I mean, your NAV is, but you're not worried about that right now. You're going to only worry about your dividends, and that dividend is still going to be paid out even though the market went down, because they're trading options. and they can make money when markets go down with options. So that's something that can help you sleep a little better at night. I'll go into that in greater detail at the lodge when you come out and we go hunt birds and pheasants. I'll show you how that all works. All right. So we could put it into SMC. He pays those out at 120. The ones that have really high payouts, these yields that are really high, the reason they're really high is because the market's very volatile and the NAV is going to go up and down a lot. All right. And the more the NAV goes up and down, the more volatile the market is, the better the premium is on options. And that's how that works. Options, you get a lot bigger premium for an option on a market that's very volatile. So he can make more money, so he can give us more money. Makes sense, right? But you have to be mindful of the fact that your NAV is going to go up, your net asset value is going to go up and down a lot. It's going to be crazy. That's why Misty, which is Bitcoin, Coney, which is Bitcoin, NVIDIA, a little bit more stable. But if you look at Apple, 31 pays out very low. Why? Because it's very stable. It doesn't shoot all over the place like crazy, like some of these other markets. And so trading options on Apple, they don't get very big premiums. So they can't give you very much money. So, but it's much safer than safer in the sense that MRNY or SMCY, their stock goes all over the place, right? Microsoft, very low, 24. It's lower than Apple. Why? Because it's very stable. All right. Facebook, very stable. Not going to give you, those are big returns, 24%. Don't get me wrong. That's like kicking a rock, and that's crazy money. Okay. A lot of money. But some of these are outrageous money. Coney and Misty, SMCY, that's outrageous money, but that's because the dividend goes up and down a lot and fluctuates. The NAV goes up and down a lot. Everything fluctuates on that one. And if you don't like a lot of volatility, you want to stay away from those. All right. So anyway, that's the name of the game. We got 4,049 in cash. We could go put it back into something else, or we could come down here and we could buy our four-wheeler. Well, our four-wheeler is $7,000. Our Harley's $20,000. Our Tesla Y is $500 a month. How much? You don't have to put any money down when you buy a Tesla. Well, you do. Yeah. It's like $2,500 to buy the Tesla Y, and then you have to pay $500 a month. We got $4,000. We got enough. We could buy the Tesla. We could get our Tesla Y right now if we wanted to do that. All right. Let's wait and see if we can't get a little bit more dividends and decide what we want to do with our money. We could reinvest it right now too and start getting more money coming in. But for now, class is over. I got run out of time. We're going to leave our $4,000 in cash, and we're going to decide what we want to do with that money, whether we want to come down here and put it into a Harley, whether we want a four-wheeler, Tesla Model Y, what do we want to buy, or we can just go reinvest it back into the market and make more money and bigger check next month. What do you guys want to do? Let me know in the comments. Write in the comments what we should do with our money, with our cash, whether we should go buy stuff or whether we should invest it, reinvest it, and grow our portfolio size so we can make more money next month. Or we can do a combination of both. We could put $2,000 towards our four-wheeler, $2,000 towards our savings in the Harley, or we could, and then put $2,000 back into something. That sounds like fun. Day 27, we're going to get money on Tesla. And I'll move all this over out of the legacy UBI and into the cash cow, because the cash cow is so much better. That's the new model. Oh, so nice. This is what we're going to study at the ranch. Hopefully you guys will come to the ranch, and this is the one we'll talk about at the ranch. All right, guys. I got a Sunday school lesson for you. Let me give you that one real quick. Volatility is your friend. All right. Short-term day traders and or scalpers love volatility. And so do the guys that are trading options. They love volatility. Why? Because it makes the premiums of the options much higher. Okay. Volatility is what moves the market. News, weather, government reports, earnings, interest rates, and technical traders. No volatility, no trend. No trend, no trade. And we like to trade, so we need volatility. So don't be afraid of volatility. Volatility is your friend. And again, back to the spreadsheet, the reason these are paying out such big dividend yields is because they're very volatile. So if you want big dividend yields, you have to have volatility, and they go hand in hand, one with the other. You want lots of money? Well, you have to have lots of volatility. If you can't handle the volatility, don't jump in there and ride with the big boys. Stay out in the more gentle markets like Microsoft, YMAG, or Apple, some of these more gentle ones. All right. Get your feet wet, buy a few of these, put a couple $100 in there and watch them, see what they do. And You need that cash cow portfolio that I've got working on, so you can understand this a little bit better. This is the legacy portfolio. It's old technology, old news. We got to get you moved into the new cash cow portfolio. All right, guys. Hope you had a fun day. If you did, give me a thumbs up if you like what we did today. Looking at the markets, analyzing them, putting in our dividends, running our portfolio, pontificating about the markets. Give me a thumbs up, and we'll do it again on Monday morning. All right. And hopefully I'll have this stuff moved over into the cash cow portfolio, have our everything finalized for the ranch, and you guys will come to the ranch. I don't have your phone number. I don't have your name. I've never sold you anything. So I don't have any way of getting hold of you unless you came to a class at the university. So you guys who haven't ever come to a class at university, I have no way of getting hold of you. So you got to somehow get a hold of me so that you can come to the ranch. You got to come to the ranch. Come and be a ranch hand with me. All right, guys, we're going to let you go. Take care. We'll see you on Monday. Same time, same bat channel, same bat cave.